Welcome to Mind Your KPIs, top metrics for finance teams should monitor. Brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before we get started, there's just a couple of housekeeping items. After the presentation, we'll have a Q&A session, so please use your GoToWebinar control panel and we'll get to as many questions as possible. Now, in answer to a frequent question, you will receive a link to this webcast via email in the next 24 hours, so no need to take copious notes. So with that, I'd like to say something about our sponsor, and that is Oracle NetSuite, a cloud-based business management platform used by more than 28,000 organizations across the globe. NetSuite seamlessly integrates financial planning, accounts receivable, accounts payable, revenue recognition, tax management, and core accounting functions with real-time financial visibility to improve financial performance. To learn more, please visit netsuite.com and request a free product tour. So with that, I'd like to introduce you to our speaker, Thomas Kelly, Director of Product Management and Marketing at Oracle NetSuite. Before joining NetSuite, Tom founded T. Edward, a strategic and operational consultancy providing cloud and CXO services to Fortune 500 companies and startups. Prior, Tom held executive roles with large cap companies, including PepsiCo and eFunds, as well as privately held entities, including eBanks and PeopleNet. Tom, take it away.
Thank you, Neil. Just a little bit of insight for the audience today. First, thanks for joining. I know you're all busy, but believe it or not, I think there's a 100-degree difference between where Neil is and where I am. Neil is in bright and sunny Florida, and I am in the frozen tundra of Minnesota. So just want to let you know, Neil, I liked you when it started, but when you shared you're in Florida, then I don't know.
Oh boy,
high esteem.
you can visit.
All right. In any event, as Neil said, doing quite a bit of stuff these days for Oracle NetSuite. Just to give you a little bit more detail, my main focus is our global cloud financials. So focus on the product management and product marketing for that. We also have verticals at NetSuite. So my main verticals are the software high tech vertical, general business, which is the hodgepodge of everything. It doesn't have a home, and nonprofit. One of the things that we are doing is what we call CPM, corporate performance management. We have our budgeting and planning out there currently today, and accounting hub functionality, but we're soon to be coming out with things like account reconciliation. So really focusing on that, close process and all. So where do we go next? And yes, with Oracle NetSuite, and we are a public company. So here's our safe harbor statement. Next. And this has been approved by legal. Do not make any decisions to buy or sell Oracle stock based on what I say today. Believe it or not, legal has approved that. So next, please. So I'm going to talk about three things today. One is identify what are the key performance metrics to track. Two, describe about what's best practices for juggling finance and strategy. And as we talk through this, you're gonna find that accounting is important, but being a strategic business partner is probably as important. And then finally explain how technology can help steer your business through really any type of financial future, whether it's one of expansion, contraction, or something in between. Next. So first, let's talk about identifying and the key performance measurements to track. Next. And I want to start out with kind of some woeful tales, if you will, about KPIs that really were, well intended. But first one there is the Soviet Union and sheet glass. And the original KPI that they were using to incent the manufacturers was pounds of sheet glass produced. And true story, what they were getting was sheet glass that you couldn't even see through. So considerably thick, not as many, but pretty big pieces of sheet glass. Then they said, let's do this. let's incent them on number of sheets produced. And then guess what happened? They had sheet class, which was very fragile and breakage. And so, didn't quite work out. Well intended, but didn't work well. This next one is kind of one of my favorites, which is pigtails. And not talking about the hairdo, I'm actually talking about real pigtails. The Army post, or the Army fort in Benning, Georgia, was having a real problem with feral pigs. So what they decided is that they were going to give a bounty for every pigtail that a hunter would produce. And I think it was about $40. And it was amazing. They were getting an incredible volume of pigtails. Unfortunately, what the hunters were doing, or even non-hunters, is they were going to slaughterhouses, which there's plenty in the area, and they were getting the pigtails. They were buying them at like, I don't know, $10 or $15, and they were bringing them and selling them to the Army. So while they were getting the pigtails, the feral pig population certainly wasn't decreasing. If anything, was increasing. The next one is the Wells Fargo new account growth. And I can personally say that I've experienced this one where Wells Fargo put in place, what I would consider to be some pretty daunting sales numbers about new account openings. And what they're doing is the folks at the banks were opening accounts in your name. You may have had an account where all your activity is in, but they were getting incented on the number of account openings. So they were opening all these accounts. So nonetheless, I think we all know how that ended. But the next one was building the Transcontinental Railroad. And what Congress did at the time is they said, we're going to incent you or pay you on per mile of track laid. And I don't know if you've ever seen like old maps and everything with the train tracks, but it's definitely not a straight line. It's always, like this. So they weren't laying them in a straight line. They weren't going the shortest distance between 2 points. It was always curved. So nonetheless, another example of this. And then one that I came into a company, and they were incenting the sales force to drive calls on the number of outbound calls being made. What they weren't doing is they weren't tracking it, where the numbers were, what the numbers are being called. And as you can imagine, food delivery was up amongst a lot of other things. So this is just the example of when we talk about KPIs, how simple it may seem to be on the outset, but in practice, it doesn't work out as intended. Next. And really what this is called it's called Goodhart's Law. And what the law says is that when a measure becomes a target, it ceases to be a good measure. Now, I'm not so sure I agree with that 100%, but if you look at the example they have here, they talk about nails made. And if you're gonna, base it on the number of nails you're gonna get thousands of tiny nails. And if you're gonna base it on the weight of the nails made, you're gonna get a few giant nails. Almost a great, real world example of the Soviet Union and the sheet class. But the point being is, I think you have to make sure you really understand how to put together a KPI. And while on the face of it, what might seem to make perfect sense, when you get into the practice of it, that's where the challenge comes. So as we're gonna go through this, I'm gonna talk about some ideas of how you really, need to think about what's the cause and effect of the KPI to make sure you're measuring the right thing. Next slide. So probably a good example of this was the Apollo mission. Their vision and mission, kind of what they were tasked with, was landing a man on the moon. And a lot of people remember that, but there was another part to the vision and mission, which I think if you were an astronaut, it was probably the one you were most interested in, and that was returning the man safely to Earth. So that in simplicity is, their mission statement and their focus. And I think if many of you have ever seen the movie Apollo 13, you can see how this team worked together with that in mind, where they weren't necessarily going to land on the moon, but they still had an objective, which was return the astronauts to the Earth. And they pretty much did that. Next slide. I don't know if this is coming up well, but I'll talk to this. But there's a great scene in the movie, and I think it's really a great example if you're working to put in KPIs and you're trying to develop them. I think it's a great example of what it means to kind of work together and focusing on, what the goal of the organization is. And what's happened is the astronauts they've moved from a larger command capsule into the lunar module, which was only built for 2 astronauts. And so there's 3 of them in there. And over time, the CO2 in the atmosphere, the scrubbers, which take the CO2 out of the atmosphere, is becoming saturated. So the CO2 levels are rising. And it's obviously a pretty concern because they're going to die of CO2 poisoning. And so what this scene happens is you have this, I guess the department lead or whatever they're in this room and he talks about we need to take this, fit it into a hole for this, using only what he dumps on the table. And so it's the old adage, fitting a square peg in a round hole. Well, what's interesting is when he dumps the stuff on the table, and you have astronaut, suit, you have hoses, you have documents, manuals. What's interesting is when he dumps it on the table, one might say, "Oh my God," you would imagine the human reaction is like, "Oh, I have to do what with just this stuff?" No, what they do is they get right to the task at hand because they know what their goal is. So again, just talking about how important it is to make sure you understand what your goal is for the organization, but also as importantly, how you boil it down to the tactical aspects of what you're being asked to do. Next, please. And so the key thing here is really aligning your tactics with your strategy. And so, I think in most organizations, you have to determine what are the opportunities you're going to target. How do you accurately and quantify these opportunities, and how do you prioritize them? Because I think we would all agree. I mean, anytime we sit down at the table and decide what are we going to do, there is probably hundreds, thousands of opportunities that might be facing us. But we have to make sure we understand what are the things going to matter most, and how are we going to focus on those. Probably as important is how you're going to motivate the workforce. How are you going to motivate the people? What's the type of measurement system you're going to put in place to desire the right type of behavior, right? So if we were making sheet glass for the Soviet Union, if we were on the Soviet Union side, I don't think we were pretty happy with how we were, coming up with what the measurement was just to drive the desired type of behavior, because it wasn't driving the desired behavior that they wanted. So this is extremely important. This is where we're going to talk about, getting the KPIs aligned with what we do, and as importantly with how we do it. And then making sure you justify the investment, right? So once you've identified the opportunities, you really need to make sure you're going to evaluate the return on investment. And this may help you with your opportunities in terms of culling them down, but I think it's extremely important not only to identify, put a measurement system in place that's going to drive the right type of behavior, but I also think it's as important to make sure that you really have an idea of what type of investment's required and what type of return you're going to get on that investment. Next. So as these things build here, right, there are top 3 ways to drive results. I think, 1, 2, and 3 are all effective measurement. I think it's important to point out that, the right type of measurement, obviously is going to drive the right type of behavior. And then ultimately, and hopefully, the obvious outcome is you're going to achieve the goals and objectives you have as an organization at that, minute level of the activity I'm performing to the highest level, what my vision and mission is as an organization. Next. And so I'm going to give you a little bit of methodology, and I've used this in my career, something I've built over time, but it's called the business alignment model, and it's meant to be just that, aligning the business. What are we going to do? And the intent is behind this is that you have set the vision, and it's clear to the organization, and you're aligning the strategies. And then, as importantly, you want to make sure that they support one another, right? Because the old example of you have the sales department building the sales forecast, you have manufacturing putting together the manufacturing forecast, and if somebody is tasked manufacturing with, reducing the cost per unit, guess what you're going to have on your hands? Well, you'll probably have a conservative sales forecast, and you're going to have manufacturing blowing the doors off production to lower the cost per unit. So it's extremely important as you go through it to make sure that you don't have measurements that compete with one another, but you have measurements that support one another. You need to make sure that the business goals are clear, right? So as you put this together, it's not so much having clear understanding of the KPI, but it's also having clear understanding of that business goal. What are we trying to achieve? Not just at the highest level, but kind of in the intermediate level, more of our strategic objectives, if you will. And what this also will do is it'll establish a pretty broad framework for process improvement. You may have leadership that's coming up with the measurements and the direction of what the strategic item should be for the business, but it also gives people the ability to understand how they need to operate now, but also how they need to be operating towards the future. And then ultimately what it really is doing is it's combining the long-term strategic objectives, let's say at the top, down all the way to the bottom where we're going to be doing the projects and tactics, what we do day in and day out as an organization. Next page. And so this, on the left-hand side, you can see this is the alignment model building, if you will. And what it has here is it's, you can do top-down, bottom-up, whatever works for your organization. But the point I want to make is at the very top level, you have the mission and vision, right? So the Apollo mission, land a man on the moon, return him safely to Earth. Then you have your strategic objectives. And the way I would cast these is these are things that are probably going to take you at least a year, probably a little more than a year, could be 3 to 5 years in terms of what you're driving towards from an organizational standpoint. What are those, long-term goals that we have for ourselves? When you get down to the broad initiatives, this is really where, these are your key bets for the given year, right? So in the earlier slide, we talked about all the opportunities we have. What are those that we're really going to put into place and deliver on? These things could be stuff like implementing a new ERP system to introducing a new product or whatever. But then down below, what's also important is, in any type of initiative, you're going to have projects, but you're going to have tactics, kind of the things that I do. I'm a salesperson, making sales calls, delivering presentations. So it's extremely important to make sure that you're corralling, or if you will, all of these activities so that you can monitor them on some level. It doesn't mean it has to be like Big Brother, but at least you have an idea behind, what you're really being asked to do personally at your level. And then as you look up, you can see that what you're doing and what impact it should be having on things like the broad initiatives, and then you can understand the cascade, right? If I'm doing well, the broad initiative is doing well, strategic objective is doing well, hence we should be probably able to achieve our vision and mission. And then on the right-hand side, the point about this graphic is just to point out that I want to make sure you understand when you do goal setting and you do put in performance measurements or initiatives, I think the one thing we can agree on is that business is always changing. So probably, in a worst case, let's say new product introduction and the government outlaws your product, probably need to have something else you're going to be focusing on. So the important point is to be agile, and as well as making sure that you can, attune it down to what we're going to be doing day in and day out and what's going to support those initiatives and goals. Next. And if you're having a problem with the mission statement, I think this is a great thing. You see here, got the pirate ship and rob, pillage, and drink rum. That's pretty much our mission statement in a nutshell. So whatever it turns to be, whether it's this or landing a man on the moon and returning safely to Earth or something in between, I would hope. It's important that you get it out there and that people intuitively understand, people meaning the folks that you're working with, your employees, understand what you're doing and why you're doing it. Next. This is a book called Freakonomics. Some of you may be aware about it. It's been out for a while. They've had another book, I think it's called Super Freakonomics, and then they have a whole kingdom built around podcasts and whatever. So you can probably get more of this than you ever want. But when we look at KPIs or what type of KPIs we should be looking at, I think it's important to make sure that you kind of take the blinders off and you think a little bit about the cause and effect of what's going on. This book does a really good job of explaining some, outcomes based on certain behaviors, if you will, that you probably wouldn't have connected. Pretty impactful. So I recommend that if you and your team are going to embark on this, instead of it just making an exercise of throwing a couple measurements up and saying we're good, take a little bit of time, work on this, because you're going to find maybe if you do this, you can actually have some pretty good KPIs that can have a major impact on your organization. Next. As an example, obviously one of my employers was PepsiCo for many years. It worked bottling operations across the US. And one of the things we always dreaded was the workers' comp premium. And what would happen is corporate would negotiate the workers' compensation premium. And let's just say there were 10 bottling operations and the premium was $10 million. Guess what would happen? Well, every bottling operation would get $1 million expense put on their profit and loss statement, and we need to manage it and overcome it. The reality of this is it did not take into account what was driving the workers' compensation premium. And when you looked into it, and it really wasn't rocket science, we actually went and asked the insurance companies, how are you coming up with the workers' comp premium? And they pretty much drilled it down into two things. One was obviously the number of incidents, right? So these OSHA reported accidents. And the other one was days work lost, which was something that was pretty interesting, because what they were telling us is that for every day an employee who's out, gets hurt on the job and is out, for every day they're out, the probability of a lawsuit being filed increases dramatically. So what did we do? We went to corporate. We told them we wanted to put this in place where we're managing. Obviously, we had some safety programs started. We continued to enhance them to reduce incidents. But when we did have an incident, what we focused on was making sure we would get that employee back to work as soon as possible. But we also had other things around it, making sure we could help the employee out. Maybe if it was somebody who was making meals for the family, we wanted to make sure, we can have our employees drop off some meals. We can, visit with the employee in the hospital. And it was not, insincere. The idea was let the employee know you cared about them, but then also to demonstrate, you cared about them by doing some of these things. And then to get them back to work, well, here you see what's called a route truck driver slinging cases. If they hurt their back, obviously they couldn't do this. So the idea was to get them back to work doing light duty, could be job desk, whatever it might entail, but to make sure the employee is back in the flow of things so that they feel wanted, which I think is really what it comes down to. So in doing this, believe it or not, we cut the workers' compensation premium in half, and that's no joke. So as I said before, if your metric is net income, and that's my KPI, well, there's a whole host of things that go into that. Well, imagine this: if you could take $1 million of expenses and cut it in half, I'd argue that have a pretty good impact on your bottom line. So as an example, make sure you're digging into what the cause and effect of things are, and make sure that when you're setting up your KPIs, they embrace these things and that the desired behaviors are being demonstrated and done such that the ultimate goal, the workers' comp premium, is going to be reduced. Next. Another area that I dabble in is I coach high school, college, and some semi-professional baseball players in pitching. And for those of you who are not aware of Major League Baseball these days, they call metrics, pitching metrics, and you may all be aware of, wow, how fast somebody is throwing the ball. Wow, that pitcher can throw the ball 100 miles an hour. What you may not be aware of, there are things like spin rate, how fast the ball is spinning, sink rate, arm angle, where the pitcher is standing on the mound, on the rubber when he releases certain pitches. I can go on and on. There's thousands of these data points. So I don't want to be off. Let's just say this: if you've seen the movie Bull Durham, I'm not going to say every pitcher is like Nuke LaLoosh, but let's just say many are. And as I'm talking about how you're going to take the information for your company and distill it down for your employees, imagine having to take thousands of data points and distill them down to Nuke LaLoosh so Nuke can improve his control or his spin rate or his velocity. It is a challenge, but the point I want to make about this is when you really want to know your stuff, you want to give people tangible feedback that they can do something with, that they can affect. So if somebody wants to throw the ball harder, what are the things that we're going to do to improve that pitcher's opportunity to have more velocity? Or how are we going to get that pitcher to spin the ball faster? What are the things that we can do? And there's plenty of things you can work on, but if you can drill it down and distill it down to some of the key things, it makes it very actionable for the individual, whether you're, a salesperson for a company or, maybe you're pitching for a college. But the whole idea is about improvement, but improvement that makes sense to you at the individual level. Next. And so here's the thing you've been waiting for: the KPIs that finance department should measure. And so I hate to tell you this, folks, but I know you dialed in here today. I'm going to tell you what they are. I mean, here you go. You can do a Google search and you'll get over 10 billion results in terms of the measurements that you should be following. Here's the point I want to make. These measurements are good, but the fact is they may not be good for your company. So the point I want to make here is, regardless of what you're going to choose to do, you have to make some effort to determine what are the right type of measurements. What makes sense for my company, in my industry, for my employees, right? Because we have employees that are at various levels. So you want to make sure that you're going to be able to deliver something that is not going to be overwhelming, that's going to be fairly intuitive, and that's going to drive the right type of behavior on the individual level that's going to, result itself into driving your organization towards those overall goals and objectives you may have. So just keep that in mind. There's plenty of measurements out there, but make sure you do the work to determine what's right for you and your organization. Next. And so this is the infamous bell curve, and I can tell you from personal experience, the more you measure, the less gets done. So there's also a sweet spot, and I usually would kind of snap the chalk line at 10 for my situations. Sometimes it might require more, sometimes it might require less. But again, you have to determine what's going to be right for you. But I would guarantee you, if you start measuring too much, it's going to become fairly daunting, and it's going to become almost like paralyzing to some degree. So make sure that the KPIs you are going to choose and the ones that you are going to put in place for people to action against is digestible, for lack of a better term. Next. And so here we see a museum guide taking a couple of folks through the Museum of Natural History, and they've stopped here at the T-Rex skeleton. And the one gentleman's looking at his friend because the guide has just said, this T-Rex skeleton is 68 billion and 4 years old. And the man is just, wow. He goes, how do you know? How can you be so exact? Well, and the tour guide responds, when they hired me 4 years ago, I won't quit my day job. But the point behind this one is important to be made. There is going to be a trade-off between accuracy and what's enough, Pareto, 80-20, what it might be. So make sure as you're going through these exercises and you're determining what's right for you, sometimes it isn't, everything's not going to be 100% black and white. The other thing you have to be able to be comfortable with is, to what degree of accuracy do I need to make sure that my KPIs are going to be able to be actioned against. So I just use this example because we've run up against it in the past. Sometimes somebody comes up with the right KPI, but I'm going to need to build, a super data server to be able to spin the numbers. So you got to think about that as well as part of the process. Next. So what I want to talk about now is describing for you some of the best practices and how you can juggle finance and strategy. So what I mean by that is, doing your, what I could say, your day job as well as your other job, and I'll get into that here. Next. So for those of you who have not seen the first Ghostbusters, this is a great scene. Rick Moranis is the Louis Tully, the accountant, and he has a bunch of folks over for a party in his apartment. And the quote here is he's saying, he's handing out Nova Scotia salmon, which he says, Nova Scotia salmon from Canada, only $24 a pound, but I get a tax write-off, so it's only costing me 12. Makes good financial sense. A few minutes later, one of the guests asks him for aspirin or Excedrin. They have a headache, and he says, I don't have that, but I have acetylsalic acid, generic, only, half the price. Makes good financial sense. So I bring this up for all of you because I'm assuming we're all controllers, accounting brethren. I think there's an unfair stereotype for us, hence the bean counter. So if you go to the next page, my marketing colleagues were, they indulged me here, and what I was talking about is finance and accountants are really superheroes. I don't think we get enough credit for it. So I'm not going to suggest that this rivals Marvel or the latest Spider-Man movie, but there's some good comical comparisons in terms of what we have to deal with in finance day in and day out. So if you haven't had a chance to look at it, we've got Captain Finance here battling the silo. I'm sure you know where that's going. But if you have a chance to look at it, read it, because there's going to be a little bit of familiarity, if you will, in terms of what you're going to be reading. So suffice to say, in my book, and I think it's important to make sure it's going to be in everybody's books, that finance and accountants really are superheroes. Next. Because here's the deal, when I look at the job today, what's being asked of you to do, it's almost as if you have 2 full-time jobs. And what I mean by that is, I talked about, the bean counter. So we have to count the beans, right? But that's not the only thing we have to do. But in counting the beans, what's really being said there is it's, your control environment, the accuracy of your financial statements. It's all the stuff that you have to do to make sure that you can say you've got good internal controls, if you're going to get an unqualified audit opinion. So you have this kind of, I would argue, full-time job just dealing with counting the beans. Next. But what the organization is really asking of you more and more is that you also have to be able to grow these beans, meaning they don't just want you to, here's the financial statement and the books are closed and everything balances. No, they need interpretation of that. They want your input. Who better than us, right, to be able to do that, accounting being the language of business. We can be the interpreter, whatever. You have the ability to do this. The problem is, right, the one commodity that nobody has enough of is time. And so really, if you put 2 of these things together, one could argue I've got 2 full-time 8-hour day jobs. So I've got 16 hours a day that I need to work. And so if you're going to do this, you're going to need, some type of help, if you will, to help you manage these 2 full-time jobs and hopefully distill them down into one where you're going to be able to enjoy your time off, your free time with your family. Next. because here's what's happening. And just in case you're wondering, that thing on the right, it's called a newspaper. I don't know, my marketing put this together for me, so they came up with this. But if you're not familiar with a newspaper, it's a thing that's made out of paper, has ink on it, and you turn the pages. Now, so I digress. But what I want to really say with this one here is that this role of the CFO, controller, accountant, it is expanding. And while here it may say, you need to gain the confidence of Wall Street, and then it says investors and media, keep going down the line. You have to gain the confidence of the organization. When you're working with your colleagues, sales, manufacturing, operations, you want to make sure that you can provide value to them. And as we go through this, you have to understand, in terms of the two full-time jobs, the organization is looking at you to deliver more probably than you ever have been able to do so before. Next. Other areas are going to be, limiting risk, and not so much just from you're going to maybe be in a global operation, you want to mitigate that risk, but probably more so, that's really at the forefront these days, is probably on the technology side of things. My God, I'm assuming you're all aware, but they've even changed the CPA exam to include things like technology and analytics. So the point being made here is even more so, you're having to make sure you're mitigating risk, not probably what you would expect it to be, right? Global markets or whatever, but also in terms of your technology environment or any other types of risk. So really what you're being asked to do is probably step a little bit outside of what was your comfort zone in the past and have more of an impact in terms of what's driving the business, and make sure that you're able to add value to making sure that the environment is safe, we're not getting hacked, no phishing problems, et cetera, which we read about almost every day or watch on the news every day. Next. The other thing is about being, as organizations grow, you got to be the deal maker. You got to be at the table, whether it's venture capital, M&A, partnerships. You really need to be adept at all of these. And when I say adept, it doesn't mean just going out and hiring a consulting firm that does this. You yourself need to know what's going on, because guess what? When you acquire organizations, it's extremely, I would argue, it's as important to acquire that organization for whatever type of their proprietary upside or information is, but it's also as important to make sure you're integrating that organization in the most effective way, from the employees to the geographic footprint to the technology you're going to use. Next. And then finally, as a chief strategist or being that strategic business partner, you really need to have information at your fingertips. You need to be able to make crucial decisions quickly. And I think as importantly, you need to be able to deliver that information to who your key decision makers are, who need it, and make sure you're delivering that effectively, efficiently, timely, and accurately. Next. And so here is a little bit about when we're trying to juggle this, finance accounting requirement to the strategic role that we're being asked to play. When you think about the environment you operate within, the technology you're using, you have to think about these things. So take the general ledger as an example. I've been in many situations where I'd go into clients and they would have, God knows, thousands of general ledger accounts. And I would say, why have you done that? Well, we set it up because we have to report on certain things. So they're using the general ledger in a way that is trying to solve two problems, when really it was built to solve one, which was to statutory requirements and closing your books in terms of the standard financial statements. What you really need to be looking at now is minimizing those chart of accounts, make sure the information is more real-time, elimination of batch processing, and that the data is rich for you to be able to report off of, but it doesn't require you to balloon out the number of accounts within the chart of accounts. The other thing to point out is, as we do operate, companies are expanding across whatever border they started in. And so there's a need for multi-currency, multi-company. Many of these organizations have, individual entities. And just think about, once you do that, all of the transactions that are happening, which I can tell you transactions are growing at an exorbitant rate, but what about those transactions that happen between companies, between your subsidiaries, and being able to handle the intercompany aspects of that, not when the month is over, but in real time. The other thing to point out is, as we do expand globally, there's a thing called globalization. And what I mean by that is there's the internationalization of what's happening, but the localization, right? So if I'm operating in China, I have to be compliant with, one of the things I have to be compliant with is a wonderful thing called the golden tax rule. I use this as an example. It's true, look it up, but you need to report to the Chinese government under the golden tax rule. Well, imagine if you had a system that automates that. By the fact that you're using the system, you will be compliant because you configured the system in such a way to adhere to the golden tax rule. And not to mention the statutory reporting, which it might be GAAP, it might be IFRS, or maybe even a little bit beyond that if there's certain countries that have certain statutory requirements, which I will tell you most do. But with all of this, I think it's as important to make sure that you have actionable intelligence, meaning, as we've been talking about, it's not just about the KPIs, but it's about what I do day to day. If I'm an accounts payable, in charge of accounts payable, if I'm a salesperson, if I'm a controller, making sure the information you're getting is personalized to the role, it's contextualized, and it's automated. So it happens on a real-time basis. Next. So let's end this with talking about explaining how the right type of technology can help steer your business through any type of financial future. Next. And so the right type of technology really can be your secret weapon. And, obviously I'm with Oracle NetSuite, so you can imagine I'm talking about this, because we're trying to sell stuff, but let me be clear about something here. I've done this many, many times. I implemented over 150 companies in 10 years. And the point I want to make about this is making sure you have the right type of technology is going back to that 2 full-time jobs. This is what's going to reduce the effort you have to make to get those 2 jobs done. And you will truly end up being, in the eyes of your colleagues, a real superhero, finance or not. Next. So, what's the secret weapon? And here are just a few activities that CFOs have to do these days, right? So some of them are, the obvious ones we know, the monthly close, ARAP, taxes. But let's be honest, there's probably 100 other things that we can put on here that we have to do these days as CFOs, controllers, and accountants. Next. So really, when I thought about this, I came across these the other day, but Leonardo da Vinci and the Vitruvian Man, I really think what organizations are asking of you is to be the Vitruvian CFO, the Renaissance man, if you will, being able to do all of these things, whether it's technology related, whether it's about closing the books, whether it's about business insurance, big data, human resources. A lot of us have responsibility for that these days, healthcare and benefits. I mean, whatever, say something and we're doing it. So you have to be able to play a key role, and you're being asked to do all these things. So how is it that you're going to be able to achieve all this stuff without the right type of tools in your quiver, if you will? Next. So here's another experience that I've had, and just to point this out, we call it at NetSuite here, we call it the hairball. It's not going to end in success, because here's how this goes about. As the cloud has come into the mainstream, there's a lot of applications out there that are really good. But the point I would make to you is this: if you've ever had to solve a variable equation and there's 2 variables, it's not the easiest thing to do, but it's workable. 3, 4, it gets a little more challenging, but you can probably still do it. When you keep adding on from a variable standpoint, a variable equation, right? Each one of these systems really is like adding another variable to a variable equation. So if you have 8 different systems out there, it is almost going to become overly complex for you to solve this situation. So when we've talked about here, what are the right type of KPIs? How did I deliver the information that's efficient, effective, accurate? If you have several various systems out there and you're trying to piece them together, 9 times out of 10, what happens is you do a little bit of integration and you're probably ending up, trying to analyze everything in Excel. This is not a recipe for success in any business situation, whether you're growing or not. Next. So what we've done, or what we do here at Oracle NetSuite, is we're trying to focus on driving automation and intelligence, right? So things that we call smart automation, and these are going to be the things that you would logically expect to see. And what do we do in accounting, right? Automating things like accounts payable and accounts receivable from OCR recognition of the vendor invoice right into the system. Employee expenses, being able to almost put travel and expense on autopilot. Bank reconciliations, being able to literally press a button and the bank reconciliation happens. Or even payroll. Companies these days are getting to the point where they're paying employees every day. There are some that do this. And even cash management, being able to effectively manage your cash on a daily basis. But then there's the accounting cycle, right? And this goes more into, we're going to be closing the books. How do we close the books most effectively? So obviously account reconciliations, period task, being able to manage the, process where we can automate, and something to the effect of intelligent accruals, right? Based on history, the system might be able to automatically generate the accruals for you. The intercompany automation, which I mentioned before, when one subsidiary transacts with another, it's immediately settled. We don't have to wait to the end of the month to do our accounts, our intercompany reconciliations. And then probably as important as all these is the visibility and intelligence. So whether that's forecasting, planning, and analysis, or we have role-based dashboards that are intuitive to you with the right KPIs that are incenting the right types of behavior. And even to the furthest extent, getting the AI and machine learning into this, where you can really rely on the system to do some of the heavy lifting for you, and even some of the heavy inference calculations. So literally being able to not only just drive the automation of what's happening, but in lockstep with the intelligence to make sure you're making decisions. Next. And so I talked about this before, where we kind of have the full two-time jobs. I talked about localization, right, where you're operating in different countries, being able to leverage the system. What is extremely important, at least in my book, is all of the control things that you're being asked to do. You really need to have a system that embeds GRC in that system. And said another way, what I mean by that is, by using the system, by processing a transaction, accounts payable, accounts receivable, being able to rely on the system to ensure that we've configured it in concert with, let's say, GAAP requirements are, or local statutory requirements, or local tax laws, whatever it might be. By just using the system, processing transactions, I am now de facto compliant on the back end. I can rely on the reporting, which is automated now. I can ensure that every transaction I process is handled in the same way, addressing any type of reporting needs, so I can be compliant with whatever the compliant requirement may be. This is the type of stuff that you really need to think about automating. So we talk about the 2 full-time jobs. I'm a bean counter and a strategic business partner. Hopefully the bean counter and the activity that you're required, you can rest a little easier. You can reduce that job to maybe a couple hours a day, and you can maybe focus more on being that strategic business partner. Next. And so this is an interesting example I want to just share with you all. And I'm sure it's changed, and I'm sure it might be a little bit different, but I would argue directionally this is correct. And so what I was trying to do is figure out, what's the average number of companies that are operating around the world, right? So I think I did this 2 or 3 months ago. I took the world population at the time, 7.8 billion, about 10% are not working, 18% are students and or minors. And so calculated the number of workers to be about 5.6 billion around the world. The average firm size is about 20, right? This was online. I know we shouldn't believe everything online, but if you will, maybe it's a little more, maybe it's a little less. But when you do the analysis, it would come out to say that you have a total number of companies worldwide of about 281 million companies. And so what does this mean? There's 281 million companies. Next. It means this, that 3.4 billion times a year, we're closing the books. So yeah, I think it's important as we look at some of this stuff and how important it is to, not only picking the right KPI, but getting the data that you can provide in the KPIs. Just imagine that if we don't do something to improve the accounting cycle, we're doing it 3.4 billion times a year. I would argue we could probably have some really good inroads if we tend to focus on this. And it's starting to happen, but just keep it in perspective as you go through your daily jobs, how many times the books are being closed around the world. Again, assuming everybody's closing the books once a month. Next. And I'm sure you would never expect me to have a slide like this, but NetSuite will solve all your problems. Well, here's what I'm going to say about this, right? NetSuite on itself is, the idea is, you as an organization are operating on the proverbial same sheet of paper. What I mean by that is it's the same database. So when I showed you the graphic before, where you've got all these different applications, the hairball that we call it, and you're trying to make sense of the information, if you're operating on one single platform, the transactions are consistent. Meaning, if I'm in the accounting department and I'm going to put a customer on credit hold, I can put that customer on credit hold. that salesperson who, oh, by the way, is maybe 30 minutes away from this customer, is going to be walking in the door, can get an alert on their phone that says, your customer has been put on credit hold. Here's why. So the point I want to make about this is it can have some real-time applicability in terms of your daily activities and what you're doing. And also, as importantly, it can keep you compliant with whatever the rules and regulations are where you're operating. And as important, what it can do is it can deliver to you based on you using the system, based on the KPIs you say that you want to use, it can deliver that to you in a more contextualized format. So you as the controller, you as the salesperson, you as the accounts payable lead, have information at your fingertips to do your daily work, and know that if you influence those in a positive way, it's going to cascade up, if you will, getting to the goals and objectives that you as your organization are setting on an individual basis and on a holistic basis for the company. Next. And so I want to end with this. I think it's a great quote from Charles Darwin. It's not the most intellectual of the species that survives. It's not the strongest that survives, but the species that survives is the one that will adapt and adjust to a changing environment in which it finds itself. So especially these past few years, I think we can all agree that survival of the fittest is probably something we need to be focusing on. So as you go through things, just remember, it's not about how big you are, how small you are. It's about how you get the job done, how effectively you get that job done, and how you respond to the different stimuli in whatever situation you may find yourself in. Next.
All right. Well, yes, let's get to audience Q&A. And again, a reminder to please use your GoToWebinar control panel to pose your question, and we'll get to as many as possible. So let's take a look at questions coming in. And here is a first question. How do you anticipate that finance's responsibilities will continue to evolve in 2022 and beyond?
Well, I think it's definitely going to keep changing. But here's maybe what might be behind that question, what I probably would talk about here. I've been in some situations on panels where like AI, machine learning, and I look out in the audience and there's just kind of like fear on the faces of the accountants. And while on the one hand, you could say some of this automation will probably replace some jobs. That's true. I would also argue, though, is that we as a collective group are probably more prepared, or could be more prepared, because we have this foundation that's going to allow us to interpret the information. I talked about the language of business being accounting. I think it's going to be extremely important that you stay up to speed on that and you push yourself to look at stuff. Not so much I'm going to learn how to be an expert in AI, but more importantly how you're analyzing the data. Because I think we've seen this before, whatever, we come up with dashboards, come data warehouses, whatever the do thing is, like, wow, I'm going to have all this information now. I have not seen a situation yet where you don't have to physically or interact with the information to make some sense out of it, to formulate it in such a way that makes it actionable or makes it able to be interpreted by others. So don't kid yourselves. The change is going to keep happening. Like I said, the CPA exam has sections on it now about your understanding of technology and your ability to do analytics. So I would say if that is changed, I would expect more change if things keep happening. So the more you can be a business person steeped in accounting and finance, the language of business, I think the much more valuable you're going to be as an individual to any organization.
Great, thank you for that. Another question here: different departments care about different KPIs. How can I prioritize juggling asks from multiple functional areas?
Kind of goes back to what I was saying. You have to decide what's right for your organization. I would really implore you to make sure that, if marketing wants 20, I don't see how that's realistic, especially in this day and age. Trying to manage 20 different data points is going to be overwhelming to any one department. So I would push back on them to really boil it down to what are the measurements that are really going to matter? What are the measurements that are really worth tracking? Because I think the other thing is, I joked about the T-Rex skeleton. You have to look at what's possible, meaning there could be a great measurement out there, but if you have to build an entire process with people and systems and technology just to capture that information, I would highly implore you to try to do an ROI on that. I'll guarantee you, I can't imagine that's going to pay off in the long run. I mean, maybe in a very unique circumstance, but I've never seen that be the case. More often than not, it's going to be, what are your standard processes and what's falling out of those processes and what can I glean from that? That's going to really make the biggest impact. So I know everybody wants everything, but I think your job is to kind of tell them, okay, look, show them the bell curve. What we really need to do is we got to focus on what matters most. We need to focus individuals down. We want to determine what's actionable, because if you're in an environment where people are responsible for 20 different indicators all at the same time, I don't know. I hope you have a lot of stress relieving programs in place for your employees.
Here's a question from Mike Denman. I believe that's the pronunciation. What do you see as the evolving role difference between controller and versus finance director?
So, I think as you go in terms of larger organizations, you maybe have the opportunity, or you have the option, if you will, to separate the roles to some degree, where the controller is going to probably focus more on that control environment. Doesn't mean that's it, and the finance person is going to be, I'm doing FP&A and analysis. I think as you go down to more of the smaller to mid-sized segment, I think you really don't have the luxury of having a lot of resources. And I think most organizations, you call it whatever you want. Some call it vice president of finance or controller. But the point is, in those roles, you really need to be, I think, this scenario that I mentioned, maintaining the control side of the shop while being the strategic business partner, spinning the numbers, coming up with the plan, et cetera. So, I would say, if you aspire to one or the other, that's where I think you can go to maybe a larger organization that's going to have these, positions separate. But I would probably encourage you that as you start your career, if you're not starting at a large organization, start in the area where you're going to have accountability for both the control side of the shop, as well as being able to spin the numbers involved in what's going to drive the business, the analytic side of things. Because again, not to get a horse here, but the CPA exam has that embedded in it now, your ability to do analytical analysis. So I think the line's starting to blur.
And I'd like to add to Mike's question that the Controllers Council has done 2 studies now in the last couple of years. One on the changing roles of controllers and CFOs. And so that drills down quite a bit to that question, Mike. And then just last fall, we did the digital controller CFO. So focusing in on the technology aspect of it. So I think that would be good reads for you, both available on our website under resources.
So the digital control is a real person. It's not a digital.
It's a study. It's a study on the digital controller CFO and how the roles are focusing more on technology and that kind of thing. So that would be a good read for you. I've got another question here from Ron Kwiatkowski. You gave multiple examples of financial KPIs, most of which are lagging. What KPIs do you consider to measure that are leading indicators?
So probably there's a few of them, but the one I would just go back to is the example I gave on the workers' comp premium, right? Where the lagging indicator is going to be I'm being allocated $1 million in an expense. The leading indicator, which is exactly what we did, is going to be making sure you're mitigating the number of incidents, but when you do have those incidents, making sure you're managing down how long that employee is out of work. The correlation then to those resulted in cutting a workers' compensation premium in half, which was pretty much unheard of back into the 90s, and that was the 1990s, not the 1890s.
Okay, great. Here's a great question from Steve Player. How have KPIs changed due to the pandemic? What is required with remote workforces? Are these changes permanent or temporary? A lot of questions there, Steve.
where can I start? You know, as far as are these changes permanent or temporary? I think in large regard, a lot of organizations are kind of taking a hybrid approach. I think it can be more of an individual thing. If it can be accommodated by the company, some people may like to come in to the office. Some people maybe don't want to ever come into the office again. I think one of the things we have learned from the pandemic is, you know, initially, you know, something for all of us being able to close the books remotely. I would argue we have done a pretty good job of tackling that one. The question then comes, you know, were we efficient and were we productive? And I think in large regard, at least what I'm hearing, and this is more about reading and listening to things, not studies, is that we have picked up in terms of productivity. So, you know, the old adage was, well, you know, you can't work from home because you won't be as productive. I think what we're finding is that we're actually, in many regards, more productive working from home than not. So, you know, I mean, I think the changes are here. I think to some degree it might be more indicative to, you know, the company and what it can do. It'd also be, you know, industry related too, right? Because some industries are more labor intensive than others where it requires workers to be on site. So don't know if that was really an answer, but that's kind of been my perspective on it thus far.
Sure. And I'd like to add to this question that we've heard a lot about financial planning and analysis, in that at one point it might have been a monthly exercise, and now with all the variables between the pandemic, between the economy, between political environments, et cetera, that planning is often daily now, and that's the new norm. So that's kind of an interesting twist.
Yeah, I'd add one more thing on to, I think one of the obvious things we saw out of the pandemic is that everybody needed to have much better control over their cash, maybe even beyond daily, maybe almost like hour by hour. So, you know, number one, having the systems that can give you that, you know, connectivity to banks and all that good stuff. One of the pieces of functionality that I've been working on is to be able to allow you to do your, you know, cash forecast, not financial statement cash forecast, but, you know, cash needs, if you will, short-term cash forecasts, to be able to do that all from within the system. So connecting to my bank, being able to bring in information right out of the system by, you know, percentage increases or decreases, entering in, you know, fixed numbers like I'm going to pull $50,000 from a creditor's order, being able to do that all quickly and holistically, as opposed to having to go to this system, that system, download stuff, go to Excel. That is something, at least that we learned at the Oracle NetSuite side, that people really wanted if they could have it. So, you know, microcosm of probably all the other data needs, but that was definitely a major one that we got from the customer base that they wanted.
Excellent. Well, we're getting to the top of the hour, so I'd like to just make a brief announcement. The 2021 Controller of the Year Awards is free to nominate yourself or an associate. And under the Careers tab, the deadline is Monday, January 31st. So please take a look at that. With that, I'd like to thank our esteemed panelist, Tom Kelly, for your great insights today. And many thanks to our sponsor, Oracle NetSuite. And last but certainly not least, thanks to all of our attendees. Great success to you in 2022. Goodbye.